Here's a new video for October 28th, 2013 on, look at S&P, excuse me. S&P 30-day 1-minute chart. Essentially we have, this could be wave 1, wave 2, 1 of 2, 1 of 3, 2 of 3, 2 of 3 of 3. My bet though is that it's going to turn to grinding, either a grinding or gap 3 of 3 based on a break above the top of the first wave, the top of the 1 of 3. So this could be 1 of 3, 2 of 3, 2 of 3 of 3. So if there is a rally, it could actually be a long sustained one. As you notice in the past 4 days, it's been a slow grind up, which is actually a really good sign. When you get grinders, it usually ends up being a long grind, a big long grind. For the Dow, the Dow actually broke out into what might be a third wave also, 1, 2, and 3. Highest target I have was around 16,200. If it ends up turning to a full 3 of 3, S&P target was 1803, but if this is 1 of 3, 2 of 3 to 3 of 3, probably a lot higher. For Nasdaq, it's like 1, 2, 1, 2, into a 3 of 3. But it zigzagged off the highs from last Friday, so it needs to take out at least 3950 to set up a possible 3 of 3. S&P though has a much more grindier looking chart, 1, 2, 1, 2 to 3 of 3. So I don't think I think this is earnings this week end up being as powerful as they were last week. Then there's a good chance that this market just continues to sustain higher. And I'll take a look at Google. I haven't seen Google in a while. I'm curious what happened to it. Yeah, Google still looks pretty good. Apple's earnings are after the bell. So basically, if Apple ends up taking out, if Apple has really good earnings report and takes out 545, that 545 level is very important because it's 0.618 of the entire drop from 705 to 387. 545 is like very crucial. So if it's a gap up move on the earnings, Apple could actually, the downtrend, if it breaks above 545, could be over. That's a wrap.